Good morning. Welcome to the near-term or very short-term outlook of the U.S. stock market. This is a Critical Point podcast. It's July 14th at 7:56 a.m. Central Time. Okay, you're looking at a intraday chart of the S&P 500 futures September contract as a proxy to cash in the entire stock market. Okay, what we want to look at is we had an L3 decline here. They sold. This is an L3 decline. Now, the L3 trader, of course, creates the bigger move during a month. Okay, it's buyer, seller interest, or actually, I prefer now to call it available demand, available supply. Doesn't necessarily have to be the supply and demand that people think of in free market economics that they learned in school. Okay, so anyways, we had an L3 uptrend, and what occurred was this was the first opportunity for level 3. It looked like it was working, and then bam. But look at this size of this setback. It's a warning. This could be the latest allowed for a level 3 top. And that latest, we probably should allow all this week, so it's possible it snaps back up only to fall again, okay? And so it could turn into a sloppy market here, which I think sloppiness is a sign of distribution, which is a sign the smart money is getting out of the market. But, let's take it one step at a time, as always. At any rate, we have revised that instead of saying this is a new L3 uptrend that it actually bottomed in the recent days and this thing's going higher into next week, we revised to extend this out to maximum allowed for inside waves, which are called level 4s, okay? And that type of trader creates the fluctuation you see during the week. Remember, we're tracking 12 major groups of market participants that create trends lasting seconds to several months and can explain nearly 100% of price fluctuation. So we're tapping into the truth of the market. We don't know the people inside those groups. We don't know their specific analysis, but we know what they're generally doing. But we also know their behavior, where we can get to specifics almost to precision of when they're going to stop buying or selling. At any rate, they stopped yesterday. Basically, the latest allowed for a level 4 to trigger the latest allowed for a level 3. Both of those traders turned into sell mode. And yesterday, some of the technicians, regardless if they were bullish or bearish, were rather shocked of yesterday's weakness. And it just goes to show you people can just be so bulled up, and then in a heartbeat, just suddenly turn the other way. So at any rate, we're into earnings season, and we know that we're getting some bad reports out there. But there's actually been a few firms, especially over in the banking sector. JP Morgan did a lot of fast trading, apparently, made some good money, and surprised people a little bit. I guess its stock's doing pretty good this morning. We still have virus concerns that are just blowing up, and Mark Benioff over at Salesforce said if we would just wear masks, we could probably kill this virus in 3 weeks. Well, I don't know where he come up with 3 weeks, but I must say I agree with him. We could kill it in a short period of time. Okay, so we still have the virus issue. We have economic issues. The whole world's in trouble. We may still see problems between U.S., China, and Hong Kong. Okay, something blow up there. The trade war really has not gone away, but maybe it's on the back burner for quite some time now, to maybe after election even, but something could still blow up there. So there's things that can occur here. At any rate, what I want to do is show you that the level 4 downswing here, available demand has backed away, available supply increased because we can see the increase in volume on the way down yesterday. So they definitely sold. They were aggressive. They turned bearish. They may stop buying in terms of level 4 trader as soon as this morning. They don't have to stop selling. They may not stop selling until late in the overnight market, almost to say to tomorrow morning, okay? So this can be a down day still. The problem is the intraday indicators oversold, warning, you better be cautious. There's more likely to bottom sooner rather than later. So if we see trade up here, say, going into the 3170s, 3180s, that's high enough that I would say the level 4 trend is up, and we want to start looking for a top tomorrow on into the following day, okay? But again, something can go on here where this stays lower, and even though it's oversold, I have seen some markets just fall apart and go much lower, and the indicator couldn't even go any lower, and it just didn't work that well, okay? And sometimes that's a sign that you get your bounce, you get your buy signal, but it turns out to be a fake out and the market goes down some more. So sometimes an extremely oversold condition means you really want to be waiting a while. You might not get the best buy signal out of that. So there can definitely be more downside price action here. And I can see where support might be down here in the 3120 to 3100 area. We've got a trend line coming in here where support might be as low as 3050s. Okay. We've drawn a tentative trend line here. I guess you could say it was proven with this third point here, and it's least hesitating, but it looks like it's trying to break down that it's not going to work. We had a potential support level here that may still work, but you can see maybe it's trying to break down below it, and it's going to become an additional available supply level, more selling to come. All right, so I've given you an idea that with this thing can go lower all the way down into the 3050s, and we do have some variety of intraday, interweek objectives saying it can go that low, and then we got these trend lines saying, well, if it were to go that low, it could possibly be support. I've shown you it's oversold enough that we want to be cautious of being overly bearish here, that we could get a turn higher. And then I've shown you that if it gets up in the 3170s, 3180s, you got to start thinking the level 4 trend is up. Now, if it takes long enough, that may be as high as it goes, and it gets overbought and just right back down again because larger trends are down. But you have to consider that if it's not time for a level 4 top, it can go still higher than that. If it's not overbought, it can go higher than that. And again, it may go higher into tomorrow or the following day. And if the bigger trends for some strange reason are actually up, then maybe it goes all the way back up and eventually a new high, and we'll have to rethink everything yet again. Okay, this bull seems to be difficult to stop. Okay, so what we would do is, I think if you see it take out this prior level 4 low, which is actually a truncated higher low, we might move to this one a little bit lower here to be a little bit safer, more conservative. Trade below 3,111.50 on the September futures could be a sign that it took out a level 3 bottom, and we could have downside for quite some time. But until it takes that out, and I just realized if you want to be even more conservative, you need to take out this low at 3,105.25. Until it takes those lows out, there is a chance this is just a fake out to the downside. It got dramatic. Somebody sold a lot, no question about it. Someone is distributing, saying, here, you take my stock, okay? But the point is, if it can go all the way back up, it also means the buyer still has lots of money, still determined, still convicted, maybe got a little sloppier, maybe just decided it would help the bears out and drop a little because they wanted to buy a lower price and wanted to buy a dip instead of chasing the market. So we're still at risk this thing is going higher. And I must say, to make me feel safer that something is truly turned over here, you need a violation of these lows here, going back to, say, July 9th on into July 10th. I think that would help. Okay, now let's move out to the daily chart. We want to go to the S&P. And by the way, the NASDAQ led this decline yesterday. Tesla exploded something like 15%. By the end of the day, it was actually down. Okay, so it really shocked people here. I think we got a more significant top end, and here's what it is. This is the first opportunity for a level 3 top. Yesterday was pretty much the latest, and I'll go ahead and say you just got to take a chance. It was the latest. This is a true L3 top, even though I'm showing this old time frame. Really, the model is saying, nope, start over again, redraw that line, and you're coming up that really this should be the latest, or at least this week should be the absolute latest for this level 3 uptrend. So we were just discussing the level 4s that created the twists and turns along the way. And this is your level 3 that's creating twists and turns for much bigger trends, okay? We can see the stochastic indicator, although it's sloppy on a daily basis and it gave some false buy-sell signals, seems to be now be determined to be bearish, although it is a narrowing spread here, warning it could still bottom. The market's starting to break below the 5-day average. It's starting to move below yesterday's low here, so we want to keep an eye on that. I say it's down into a level 3 bottom that unfortunately can show up this week. So this may only be a 2-3 day decline, and by next week the market is up, and it could even stay up into the following week. Don't know yet, but I'm concerned that basically this target this week could somehow be extended early next week. They could also hit this very hard in just the next couple of days, just really throw in the towel and slam this all the way back to your 50-day, 100-day averages, your 200-day averages. Look at all three of those, okay? So again, if they could just violate the low back here on July 10th, let's go back to the July 9th low of 3,105.25, just to be a little bit safer and more conservative, takes that out, I'd be willing to give it a chance for another day or two to see if they even knock it down more. So this market may well be on its way into that 30.50s to as low as 30.10s even, okay, as they just hit this hard and fast. Then I don't doubt they can retrace a good portion of that for the L3 top, and then we get another leg lower, okay, as this market works lower within the bigger trends. Now, I know for this video I should be stopping here and not showing you the bigger trends, but I'll just throw that in quickly here. I'm trying to break these up so we're not podcast on. Look at this negative reversal here. Pretty much bumped its head on this old trend line. It's in our objective range. It was actually in a smaller range that I took out so I could see this better. And you got the negative reversals, and I've been saying all along we really need a negative weekly reversal. Instead of trying to continue to try to pick the top, we should just say give us a negative weekly reversal. If it takes out last week's low at 3,105.25, that's not looking pretty for you bulls, okay? And so the market should decline into August for level 1, but the level 3s and the level 4s are going to create twists and turns all the way down. This could be a struggle. This could turn out to be nothing but a trading range and consolidation before going higher later this year. But it could be a sizable decline. We could be relaunching a long-term bear market, believe it or not, over the next 12 months. But I'll explain that in the other videos. So there you go. I gave you some parameters to watch out for the next 24 hours, the rest of this week. Hope it all works out for you. Manage your risk relative to analysis of others. Thank you.